Hello, Smart Money Street podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I will be your host. So today I'm joined with Bob Frick. How you doing today, Bob?
I'm doing great. Beautiful day here in Northern Virginia.
Nice. Well, glad to have you. Glad to have you on the show. Can't wait to hear what you have to say. We got lots of changes in the world, and want to get your insight. So, before we begin, for the listeners who aren't familiar with you, maybe you can tell us a bit about your background.
Yeah, I was a business and financial journalist for 30 years, worked at newspapers and Kiplinger's Personal Finance magazine. I've worked in behavioral economics. I started working as an economist with Navy Federal 7 years ago, basically because I have so much familiarity with the economy, but also with consumer issues, housing, cars, interest rates, loans, credit cards, all that sort of thing. So I have an unusual background for an economist, but that's what I'm doing these days.
Nice. That's awesome. So I'm going to dive right in and just kind of talk about some of the big stuff going on to get your thoughts. We just had an election a month ago, so it's been a little while, but still, we don't have the new administration in yet. We still got another month for that. So what are your thoughts since all that's transpired? We've got Trump coming back. Where do you think we go based on what he's said in the last month, plus, his campaign, and what do you think is the economy and investments are going to go in the next few years?
Yeah, well, right now the economy is going great. There's one problem, of course, which is inflation has risen so much. So people are under a lot of financial stress, but the economy's growing, the labor market's good, people are spending at a decent rate. Obviously, inflation is really making people, pinch their pennies and mind what they spend money on. So for now, the economy is doing very well. But again, the problem is inflation. And certainly lower income Americans and lower middle class Americans are being crushed still by higher inflation, especially high food and housing costs, but also, and I can talk about this more, high transportation costs. It's very expensive to own a car these days. And a lot of people don't understand the pressure that brings on a lot of families. But as far as the Trump administration, I'm very agnostic about what may or may not happen. I really depend on the big economics firms, which we have dealings with. And the overall view of economists is it will be inflationary because of more tariffs. And if there are certainly, uh, people deported, mass or otherwise, that will be inflationary. So we're looking at a generally inflationary environment, although to the degree we don't know.
Yeah. So you mentioned deportations inflationary. So how does that work?
Well, if you have fewer people, especially fewer lower income people working, then you have to fill them with higher income people. You have to pay people more, so wages will rise. And then you have the whole question about who's going to, pick the crops and manage a lot of the lower income jobs that illegal aliens, undocumented workers. But again, we don't know to what extent that'll happen. I think my bigger concern is will there be a cutback on legal immigration, which we are really depending on now for the economy to expand? Um, we don't, a lot of people don't understand, but legal immigration has essentially been filling in much of the expansion of the labor force now that keeps the economy growing, it keeps inflation lower. My personal hope, and this is the only, I'll flag when I'm giving my personal impression, is that we do not restrict legal immigration.
Yeah. Um, yeah, I mean, it's definitely a big issue that has to be solved or fixed. It's a complex issue for sure. It's interesting though, because we have inflation, right? We have inflation in goods and services, and yet we don't have wage inflation to keep up with it. Wage inflation's been bouncing around for 20 years, but basically flat. So how do you see that changing, or are we still going to be in the same place where wages just aren't raising along with the price of everything else?
Well, that's a good question. I mean, we have seen some good wage increases since the pandemic started. First, it was for lower income people, and then it was for more middle income people. So wages have been rising. The problem is, while currently wages are above the rate of inflation, it's not by much. It's by maybe a percentage point, maybe 2 percentage points, although that's debatable. So the problem is, in order for people to get ahead of this weight of inflation, yeah, the rate of inflation has come down, but the weight of inflation is still pretty extreme, especially for lower income people. It's going to either take time with people's wages above the rate of inflation, or we need to see wages rise more. So it's not a great situation. It's very uncomfortable. And I speak to a lot of my colleagues who deal with our members who are under financial stress, and things aren't getting better for lower income people. That's for sure.
Yeah. Yeah, I mean, I think that's true across the board. And of course you got
Oh yes.
credit card rates, which are through the roof as well. That can't be easy, especially for people who are living off credit.
Yeah, we're starting to see maybe the credit situation turn a little bit. People have definitely run up their credit card bills, um, and to an extreme, but it seems as though we've reached somewhat of an equilibrium. We're seeing people, late on their loans, that's starting to peak. So perhaps that's not as bad a situation as it has been, but it's still not good.
So I wonder if, yeah, I mean, because at some point people max out their credit cards, so credit card debt doesn't keep climbing because they have no more room. But yeah, I wonder because I mean, what I've been seeing certainly, and I'm sure you are as well, is people have been struggling for the last few years and racking up credit card debt because they just can't balance the budget because, as you said, all those daily costs that everyday people have to deal with, but you know, people who are lower socioeconomic positions can't afford anymore. Um, how is that going to change? I know that they're talking about making the government more efficient, which means laying people off. Um, and how is that going to impact the economy? I mean, DC would be obvious because most of it's in DC, but how is that going to impact the economy? Is it big enough potentially, depending on the amount of layoffs, is it big enough potentially to impact the economy, or what are your thoughts?
I don't think we have any idea the degree of which the layoffs will occur. And the devil is in the details. So I and most people are not speculating on that. We're basically looking at different scenarios. And if it's an extreme layoff situation, that will definitely affect the unemployment rate. It could very well push up inflation. It's going to put a strain on social services. Most people don't think that's going to happen. It'll be more of a moderate or even a minimal layoff, but we don't know. And so, speculating without enough information is dangerous because you tend to fall into your own biases or other people's biases. So I tend not to do that. And what we're doing is essentially, looking at different scenarios, and that's the best way to play this.
Yeah, that's smart. I like the way you're looking at it. I appreciate that. What does, in your best you can tell, I mean, obviously we never have full information for anything. Um, best you can tell, where do you see inflation going over the next few years? Because there's a lot of inflationary forces happening.
Right.
Even though inflation has come down, which, it certainly did in the 70s too, and then spiked back up. So where do you think things are going over the next few years or 5 years?
I would not speculate on 3 to 5 years. I can look at the next year and I can say that the pressures for higher inflation are definitely there. Even if you discount anything future President Trump would do, the economy is already hot. It's picking up, and that is causing inflation to pick up, even before we even start speculating about what the next administration might do. And the problem with this is that, as opposed to, say, 5 or 6 years ago, we had gone through a period of very low inflation since the Great Recession. All through the 2010s, inflation was low. Matter of fact, people were worried. I mean, if you can believe it, people were worried that we would go into a deflationary spiral. Well, that's obviously not happening now. So any inflation that occurs now is happening on top of this mountain of inflation we've already experienced. So both the economy and families are going to be very sensitive to more inflation. So when I think about, greater inflation, it's much different than I did 6 or 7 years ago when I would say, hey, we could absorb more inflation, no problem. Now we're already, we're the tub is full, right? And if we pour more inflation into that, it's going to spill over. And that could cause problems. I'm more concerned with individuals. But as an economist, higher inflation across the board um, would eventually, if it's great enough, and I'm not saying it would be great enough, slow economic growth and perhaps push us into recession. That is just one scenario. I'm not saying that will happen. I'm just saying if we're talking inflation, that's a scenario we have to consider.
Okay. So let me ask you this. You talked a lot about the kind of the everyman problems, credit cards, housing, cars. Um, Tell me a bit about the housing market because housing market's been puzzling me for quite some time, and
Right.
I'm always looking to get people's opinions to see if there's things we're missing. So, what are your thoughts on the housing market?
Yeah, I spent a lot of time on the housing market. I famously do these long decks, 45-hour long decks, explaining the housing market. But it boils down to this. After the Great Recession, we didn't build nearly enough houses. So we're about 4 million houses short from where we should be. Lack of supply means price is going to go up. That's the core of the problem. And the fact that we haven't built more houses is partially a function of all the home builders that went out of business in the 2010s. And now we have high mortgage rates, which puts pressure on builders. We also had the COVID crash, which pushed up the price of building materials. So now homes that are being built are very expensive. So the core of the problem is not enough houses. And then you follow that on with high expenses to build more houses. And then you pile onto that high mortgage rates. That's the problem right now. The average and median age of home ownership is going up dramatically. That's not good. We want younger people to be able to buy homes. But we don't have the stock of starter homes now because the price of starter homes has been pushed up so much. Your a starter home now is $350,000. That's not a starter home. When I bought my first home, it was $90,000. When my oldest kid bought her first home, it was $170,000. And now my younger kids are looking at getting into the housing market at $500,000. That is just a dire situation for younger people.
Yeah, so where does that go? I mean, it's not going in the right direction. I mean,
Right.
what's the result of all that?
It's going in the wrong direction. Well, we need to build more houses and we need to build denser housing on smaller lots. Some of that's starting to occur already. Vice President Harris had a plan to build 2 million houses and rehab and build more apartments. I'm not sure that could ever have come to fruition, but at least um, the idea was there. Again, I'm not endorsing that plan, and again, it was fraught with problems. But we need more houses. We need more construction. And any solution is to build our way out of this. So that's what I'm looking for, and hopefully that will occur. Now, if mortgage rates come down, that'll give a big boost. Give a big boost to buying, but it'll also give a big boost to building. And that's what we need. Again, that's the core of our problem. We need more houses, especially, but we also need more apartments. So that's the solution. But just as things seem to be getting closer, then things seem to be getting further away. So there is no logical end in sight to the housing crisis. I wish things were different, but that's the grim reality.
Yeah, yeah. Outside of a recession, I'm not sure what's going to fix that. Uh,
Well, will a recession fix that though? A lot of people say that, and I've always challenged that because what will a recession do? It's not going to build more houses. And even if home prices come down, given we don't have a lot of houses, they won't come down by much. So, and then during recessions, you don't have much home building. So I think a recession is may or may not help the situation.
what I find interesting. is when people talk about there being lack of housing. 5 years ago, before COVID, we didn't have a lack of housing, and houses were cheaper. But now all of a sudden, everything's much more expensive. I don't think we had a population boom in the last 5 years. So while I'm not saying you're wrong, because a lot of people are saying it's supply and demand, and I've always been of the impression that it's interest rates and values. Of course, I've been wrong, so I'm going to definitely admit that I seem to be wrong in this, but I still can't wrap my head around how this is true. Because in order to have a supply and demand problem, it means that the demand has to be stronger. Well, why is the demand stronger? Did we take on another 20 million people that didn't exist before? Like there's some pieces that don't line up for me, and that's what I'm trying to understand is what happened, because I know COVID happened, we all know that, but it's not like we just all of a sudden took a bunch of new people that caused the problem to be worse. Yes, we've always had a supply and demand imbalance, but it didn't get this much worse. So the question is what happened that caused this that didn't exist prior to COVID?
I'll challenge your premise. There was a lack of housing before the COVID recession, and that was the premise of what I was laying out about the housing situation. When we had the Great Recession, the number of home builders was cut in half. The number of homes left us with a deficit of 4 million homes. So there was always that tension. Now, the difference is as people started gaining more wealth, as they did, and the economy righted itself as we got to 2015, 2016, 2017, the demand for housing was already increasing and the price of homes was already increasing. Then you hit the COVID recession, and all of a sudden, building stopped. The demand went through the roof because remember, you could get a mortgage for 3% or less. That pushed up the price of the homes that existed. So now you have a situation. We started with too few homes, and now we had extra demand because of low mortgage rates that pushed up the price of houses. And because inflation is a ratchet effect, home prices haven't come down. I remember when COVID first hit, and we're in 2020, 21, 22. A lot of economists are saying, "Oh, the demand for houses is going to go down, home prices are going to retract." But they missed that crucial ingredient, which is there were never enough houses to begin with. If you look at, proportionally, the number of families in the US and the number of houses per family, that's fallen by 30% in the last 15 years. 30%. That's an incredible shift in the housing market. And that's why we are where we are now. It's a combination of too few houses and then greater demand that pushed up housing prices. And now we're stuck in this situation.
So okay, so I'll buy that. So let's walk through the premise then. But we also, on the other side of it, we have supply and demand is always a part of the equation, right? You have the supply and demand, which you're talking about, right? There's not enough houses to fill. But at the same point, if that's continued to drive up house prices, at some point they become unaffordable. But people are
They
still
are
buying them,
unaffordable.
right? But people are still buying them, so they're not unaffordable. So
They
I
are
guess
unaffordable.
my
I
point
mean,
is we still have a lack to keep it at the former level, but the price, I mean, around here, prices were really expensive before COVID, and after COVID, they went through the roof. Um, I mean, like I look at houses that are like, let's say $1 million house, and they're trading for like two and a half, and they're
right,
not a $2.5 million house, but people are still paying that. So it
right,
means that there's plenty of money out there inflating the cost, which means people can afford it, which means that realistically, the $300,000 house you're talking about is a starter home. So the question is the prices are certainly higher than what we were used to before. But if it's what people can pay, it's supply and demand. What are people willing to pay for a product? So that's kind of where I'm going. I'm trying to wrap my head around like what is the new paradigm we need to be in to
right.
accept that this is the new norm and it's not going to change even if they add new housing.
Well, you say people are still buying houses, and that's true, but they're buying far fewer houses than they used to.
True.
The number of homes being sold right now is a quarter of what it was pre-COVID. So, yeah, a certain number of rich people or people with rich parents can't afford houses, and and along the margins, housing can be affordable. But that's the answer to your question. Housing is unaffordable. That's why so few homes are being sold, and that's another reason why we're in this situation. So we are far from a normal housing market. And the median price of both a new and existing home now is about $440,000. That's nuts. A young family can't afford that, but baby boomers like me can. People with rich parents can. People in upper incomes families can. But housing is so unaffordable that we're selling a quarter of the number of houses that we normally would be.
Yeah, no, I totally agree with you. I mean, there's definitely fewer houses being sold, but I think in a normal market, if a house doesn't sell, it comes down in price. So if things are too expensive, then they should be dropping at some point. You have buyers and sellers that are here, and the price should be here. The sellers aren't willing to come down. The buyers can't go up.
Right,
So at some point, either they don't sell, and people just say, "All right, well, I'm just going to stay," which is what we have because we
right,
had 3% mortgages. Now we've got 7. And as somebody who's looking to retire and downsize says, well, if I downsize, I'm paying the same monthly payment that I'm paying now. Why should I downsize?
right.
Just keep the same house. So it's almost like the markets are frozen because of the speed that they raised rates. So I guess the
Well,
next
but
question,
then,
go ahead.
yeah, well, I mean, let me just add something. That's another dimension to the problem, which is the lock-in effect. Is so many millions of people locked in low mortgage rates, they don't want to move. And as you just said, they can't afford to move. So, yeah, if I'm sitting on a house and I have a 2.7% mortgage and I'm looking at paying a 7% mortgage, I'm not going to move, which is one reason why there's so few homes on the market. So, mortgage rates would have to come down radically. Some people say that we're not going to start to see the market unfreeze until they get down to about 5%. But even then, there's still a lot of people locked in. And even then, homes are expensive. And even then, the number of homes on the market isn't going to be high. So when people say, oh, when we get down to 5%, things will be better, they'll be marginally better, but they're not going to be normal. We're, we're 4 million houses short of normal.
Yeah. Okay. Well, I think it'd be interesting to see how that works. I know that a lot of the builders in our area, the fix and flippers, have pretty much dried up for the last seven
Right,
years.
right,
I think it was since 2019 or I think it was 17 when things really started to dry up. And then obviously things shut down for a few years for COVID. And they're just like, we used to see like hundreds and hundreds of these things a year. And now we see maybe like 3 to 5 in
right. Where do
total,
you live?
uh, right outside of Boston. So
Oh, okay.
we're in an area that's wealthier part of the country, so the numbers end up being higher. But if I just look at it as like an ecosystem and like if you're living in, in the sticks, maybe it's 100,000 here, maybe it's a million, but there's an equilibrium for each area. And so I kind of
Right.
look at it that way and say, all right, in comparison to other times or other parts of the area. And it's just interesting to see that builders are not able to make the numbers work, basically.
Well, I'm in Northern Virginia, which is probably very similar to Boston. I live in Fairfax County, which, is always top 5 wealthiest counties. And it's insane. I live in a walkout Rambler we bought in 1997, and it is worth almost $1 million now. It's just a tiny home. And across the street, there are tear downs, which are 2.5 million. In any other neighborhood, in an average American city, my home would be maybe 4 or 500,000, and those homes would be 1 million. So the inflation is incredible.
Yeah, I mean, I'm just pulling up my area. I saw the median income for Massachusetts, depending on the area for Boston, is right around 150,000. At the low end is 110,000, depending on the part of the city. But even some of the parts of the area that are not so great are still like in the middle, 125. So, I don't know what that buys nowadays, but
No.
uh, certainly a lot less at 7%, that's for sure.
Yeah,
So,
I mean, one of the good things, and I'm not plugging Navy Federal. I'm just saying that if you can get a VA loan, um, you know, that's very affordable for a lot of people. I used to be able to say, when this whole mess started, I'd say, look, do what I did. We bought a home. Well, it was cheap, but I was working on journalism wages. So it was all we could afford. We bought a home that had a lot of work to do. And over 4 or 5 years, my wife and I just put in a lot of sweat equity and kind of brought it up when we raised our family here. You can't even do that now. I mean, a
Right.
house that is almost a tear down is so expensive that you just can't buy it and fix it up. So again, I hate to just keep layering it on, but we're really in a tough situation.
Yeah, no, I agree. I mean, we've been looking at the same thing, where we're looking at land, and the land is 75-80% of the price of the house, and a lot of houses
Yeah,
around
right.
here are tear downs.
Yep,
And they shouldn't be, but if you're in an area with new homes going up, I mean, like right down the street, there's a house that was probably one of the worst houses in the neighborhood, and then they tore it down. They built up like a $4.5 million house. Now it's not going to go for that because everyone in the neighborhood
right,
is like, yeah, whatever, it's not going for that. But it's
right,
listed
right.
for that, right? And maybe it'll go
Yeah,
for like 3.5. But like they've got these ideas, and there's plenty of money in Boston. That's the problem. Is Boston has plenty of money, and they're throwing it at whatever, and people are willing to pay, and so we're in a unique part of the country.
right,
But it does raise the point that you mentioned, because the rest of the country is not like this, and we're kind of in a little bit of a we're in kind of a little echo chamber here where everything's perfect, but it's really not. But with most
right,
people in the country, they struggle to do the basics, and the areas that some of the areas that everyone is impacted by: food, transportation, utilities, heating, stuff like that. You experienced tremendous inflation over the last,
right.
like this 20 somewhat 29% inflation didn't exist. Like my grocery bill is more than 100% over the
Yep,
last 4 or 5 years. It's not 20, it's
yep.
like 150 maybe, even if you really break it down. So
Yeah.
how
That's
how
that's let me just interject. That's one of the things that frustrates me about other economists, not all other economists, but I like to think that there's kind of ivory top tower economists, right? And they say, well, things aren't so bad because lower income wages have gone up more than the rate of inflation. Technically, that's true. But the problem is, if you're lower income, the percent of your budget that you spend on food is over 30%, whereas for a middle or upper income person, it would be 15 or 5%. When you look at the cost of transportation, owning and maintaining a car is, not a huge expense if you're middle or upper income. If you're lower income, it's another 30% of your budget. And then you add in the cost of shelter. So even though, yeah, technically lower income wages are higher than the rate of inflation, CPI, when you consider the price of necessities has gone up so much, it just means lower income people are being crushed. And that's the simple truth. I'll die on that hill. And yet, a lot of economists can't wrap their brain around that, again, staring down from their ivory towers.
Yeah, no, look, I mean that's the truth, and most economists are living up there. I know because I'm in Massachusetts, and
Right,
most of them went to
right,
school here, and they learned
right,
how perfect the world is around them, but nowhere else. But so I guess so. Here's a few questions I have for you. So how are average everyday people supposed to deal with these problems? Because inflation's not going away, as you suggest, and I would agree. The rate of that is TBD, depending on the administration and their policies, but
right.
it's still going to happen, and it's still not going away, despite. And actually, here's a question for you. So before I get to the other part, so Powell came out and dropped interest rates 50 basis points before the election, which I thought was a stretch. I didn't think we needed it. I thought we could have stayed pat. I think we would have been fine if we just kept it. But he lowered it, and they're lowering it again, and they're talking about, another 50 by the end of the year. And I was like, what is this guy thinking? Like, not only was 50 a stretch, but you're also talking about another 50 by the end of the year, which is
Right,
totally unnecessary. They don't make mistakes. What they usually do is they sit too long, and then they wait because they don't want to go back and forth and confuse the markets. But
right.
yet that seems to be what's happening. So how do you read into this?
I Well, first of all, the markets, uh, the odds of one more rate hike in this month in December were hovering around 50%, and now they're up, I think, to 60 or 70%. There's some serious doubts that there's going to be, I think there will be one more rate hike, a
You
25
mean
basis point
drop?
rate hike, a drop rather. I'm sorry, you're right.
Yeah, yeah.
A cut, yeah, um, in December. But when you look into next year, the markets are saying, well, maybe two cuts, maybe three, but of course, no one knows at this point. So I think Powell played things well. I think when they made that decision back in September, at that time, it made a lot of sense because it looked like the labor market was tanking. And, Fed dual mandate, keep prices in check, full employment. Given what they were looking at that point in time, I think that was the right decision. I wonder if you could go back in time, if Powell would say, well, maybe we'll hold off, or maybe we'll only cut 25 basis points. At that moment in time, hindsight being 2020. But yeah, I completely take your point.
Yeah, I mean it's interesting as I think about how it played out, and I remember last year where he was saying six and the market was saying 12, 9 to 12 rate
Right,
cuts.
right,
And
right,
I was
right.
like, you guys are insane. Where can I go and
Yeah,
bet against you idiots? Because it was the
right, right.
most asinine thing to say. We're going to drop, what is 12, like 3%? You're going to go from five down to
Yeah,
two? What are you guys, nuts? But all of
yeah,
Wall Street, the consensus was nine. The median was nine. I think Powell said
right.
six. And of course, they did nothing up until right before the election. And then they said, oh, we're going to start dropping rates. Like, to
Yeah.
me, that
Well,
also
again,
was questionable. But
I agree. I agree with your basic premise is that that was way too aggressive. But again, I will go back to saying at that moment in time, retail spending was weakening. The labor market was crazy weakening, although in hindsight, it looks like we just had bad numbers, not a bad labor market. That's a whole nother issue about how we're measuring jobs right now. I think I've been saying this for over a year. It really isn't anchored in reality. I think the labor market is good, but I think people focus on Friday, right? Well, I don't know when this will air, but on,
two
December
weeks.
6th, we're going to get the jobs market, labor market will drop. People are focusing on that. Don't focus on that because those numbers are so volatile and the measurement is so bad these days. I don't even look at that. I comment on it because I'm paid to, but the JOLTS report that came out yesterday is much more important when you look at the number of job openings, the number of people quitting, which is going up, which shows some faith in the labor market. The labor market is sound, but the jobs reporting is unsound.
Yeah, yeah, it's interesting. You're talking about the statistics. I've always mistrusted government statistics. I always thought they were garbage. I listened to, I don't know if you ever remember Ed Kirshner for Paine Webber.
Oh, sure, sure.
Yeah, that guy was a card. He was a great speaker. And I remember watching him 99 when I started in this business, and he had this great presentation, and I wish I could capture the slides. It was brilliant. And he basically took like 10 years of, I forget it was GDP, whatever it was some
Right,
sort of number. And he said, all right, here's the number. Here's the number for the next quarter and the next quarter. And they do revisions, right? They do revisions each quarter. And then they do revision. Then he revised it like once a year. You go out 10 years and you look at the numbers, they're all over the place. It's like, oh,
right,
we're GDP is
right,
up like 3%. And then like the end of the year, it's like, oh, it was only up one. And then the year after, it's like it was up six. And the year after that, it was down two. And you see these numbers, you're like, this is all garbage. Like nobody
right.
knows what's going
Well,
on.
I'm not
Well,
sure I'd go as far as garbage, but I said I worked in behavior, and I've written about behavioral economics and finance for years. I worked in it professionally for a couple of years. Um, Here's the thing: people want to believe those garbage forecasts. So who's to blame? The garbage forecasters or us for wanting to believe in that? I think it's akin to astrology. It's like some people love and believe with all their heart in astrology, and people like you and I'm assuming,
yeah.
know that it's trash, it's fantasy. But we are wired to want to know the future, and we'll believe in things and people and trends and charts even if we're shown that they have been wrong and terribly wrong for the past 10 years, we're still going to hold them to our heart and clutch them and think that they're true because we want to think that we can see into the future, and we cannot. So uh, I blame people who take forecasting seriously. The things I like to look at is essentially probabilities. Given what we know now, what's the upper end and the lower end? And now you can choose your alternative. But don't tell me that you think GDP is going to be 2.8% every quarter for the next 3 quarters and expect me to believe it, you know? Um, so yeah, I think part of the problem is, the fault in our stars and the fault in ourselves, right? We shouldn't believe in forecasts, but we should also look at ourselves and think, do we really want to believe this in our hearts? Are we grasping for something? I think a lot of people, if they're being honest with themselves, just think, yeah, just give me some peek into the future. Give me an oracle, give me a Delphi, but they don't exist.
Well, that's why people believe in sports teams. They believe in Santa Claus. They believe in all sorts of things.
Right,
But
right,
I'll
right.
believe in whatever you
Hey,
want me to believe. It helps me make money, money for my clients. So,
right, right.
astrology, Mercury's in retrograde. Absolutely. Let's go with that.
Right. Well, I was a Buffalo Bills. I worked in Rochester, New York for 12 years. I was a Buffalo Bills fan. I was a diehard Buffalo Bills fan. I was convinced they're going to, every one of those Super Bowls, they were going to win, 4 years in a row, and they lost all 4 years. And now the Bills may play for the Super Bowl this year. And a part of me wants to believe it, even though I don't even know who's playing for the Bills anymore. So I recognize that deep inside me, there's this well of superstition and unfounded belief and faith, which I can't get rid of. So, that's just part of the human condition, I guess.
Yeah, you're Charlie Brown, and the Bills are the are Lucy
Right, right,
trying to kick the
right. But at
football.
least, at least I recognize it myself.
Well, as in the interest of time, we got to wrap it up here. But I've enjoyed our conversation, and I know we'll probably have you back because this always is fun stuff. What are some final thoughts you can leave our listeners with, and then where can people find more about you?
Yeah, well, you can go on navyfederal.org and you can just, type in Robert Frick. You can see all my clips. I'm quoted, a lot in the media. It's one of the things I do. One of the things that I think we've done recently, which is really important, is we've recognized that the price of auto ownership is much higher because of insurance, because of car costs, but mainly because of insurance and maintenance. And people don't realize how expensive cars have become. We started this thing called the cost of car ownership, COCO for short, right? And we publish that every quarter or so. But it's a way that we recognize that people are being crushed by car ownership, and we give advice on how people can deal with that. Now, some of the advice I think is pretty good. Like right now, when you shop for a car, look at the insurance costs on it, because sometimes you'll buy a similar car; it'll cost twice as much to insure as another car. So we're really focused on that because we realize that food, transportation, and shelter are the three big pain points. And food, there ain't a lot we can do that we haven't done already. We go to Costco a lot. Shelter, not a lot you can do about that right now. A lot of people move in, with family. But transportation is something that we can really control. And people are just waking up to the fact that car ownership is a killer and that they have to be a lot more careful in what car they buy and how they maintain it.
Nice. Well, once again, I appreciate you coming on the show, Bob. Appreciate your insights. We'll have you back on in the future.
Great. I look forward to it. This has been great. Thank you.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider or in the room, as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Bob. Really appreciate him coming on the show. Now into the panel portion of the show where we have our very own Barb Friedberg. Hey, Barb.
Hi, happy to be here today.
Yeah, great to have you here. We also have our very own Phil Weiss. Hey, Phil.
Hey Kirk, hey Barb, good to be here today.
Yeah, glad to have you both. So Barb, what were some of your takeaways from the interview?
I love this conversation. I love to talk about the economy, about housing, about pricing. I mean, now it's kind of depressing. I will give you that. But in general, as someone who's lived for, a lot of decades, I've seen so many changes from, the hyperinflation of the 70s and early 80s to the dot-com bubble bursting, to the 2008 mortgage meltdown. And I think that gives me a certain perspective that we feel like now, oh my gosh, inflation is rampant. We're never going to get a handle on it. Wages are never going to catch up. And it gives me a certain sense of pause because things are always changing. You don't know what the future is going to be, but it's not necessarily going to be worse than it is today.
Yeah, I agree. I agree completely. Phil, what about you? What are some of your takeaways?
It's not only an interesting topic, it's an important topic because the economy drives so many things. I thought it was interesting we started to talk about inflation and some of the other things that could cause it. I think that we hear a lot of talk about some of the potential policies that are going to come into play and whether they can be inflationary or not. And we don't really know for sure, but we have our ideas. And I thought it was interesting when he started to talk about deportation and its impact, right? Because that's something that a lot of people typically we just hear people talking about tariffs, but we have to think about the idea that he brought up. Who's going to do the work? It's not as simple as we always think.
Yeah, it's definitely interesting. I mean, the economy right now, I think, is dissimilar from what we've seen in the past, which is confusing a lot of people. And this gets to my theme I've been saying the last 2 years is when you look back at the 70s, one of the things that really marked the 70s was mass confusion, people just not understanding the changes going on and what's happening because it was different from what we're accustomed to. Um, so let's talk about inflation, Barb. We were talking about before the show inflation, but I mean, inflation's impacted a lot of people. I don't think people truly understand it, but um, you know, what is inflation? How does it impact people on a daily basis? Like, how can people understand inflation better?
Well, inflation is like your dollar is buying fewer goods. So, say a year ago you could buy, a pack of gum with a dollar. Let's say today it costs you $2. That's inflation. And it really hits us because food inflation has been very, very, very high, and it hurts people in the middle class and lower classes even more. And I do remember the 70s. I lived through the 70s, and I remember just everything was so expensive, and it kept getting more expensive. And I thought that it would just continue. Whereas today, many of you, especially you younger people, have never seen inflation because up until the past couple of years, prices have been so flat. And so I think you have to strategize. Okay, what am I going to do? First of all, inflation has tempered, the growth rate has tempered. But the problem is it still doesn't feel great because you started with prices at X level and now they're double that, say, with your food or, maybe 50% higher. So if it's flattened, it's still flattened at a rate that's 50% higher than it was a couple of years ago. But you also have to think of the good side. Clothing is so inexpensive. Now, that's, of course, because we import from countries like China and Indonesia, which may have questionable labor policies, but that's a different concern. Tech, I mean, the tech is very, very reasonable for what you get today. So those are on the good side. But inflation is a real issue. And I know we're not, talking budgeting or personal finance, but I implore people who are really struggling at the grocery and that sort of thing that you do spend some time figuring out what can I do now to feed my large family for less money. And that means changing what you eat, changing how you cook, and spending some time learning about how to feed your family for less.
Yeah, I agree, Barb. I think it's food is a huge issue. And I think when you think about inflation, inflation has what I think a lot of people don't realize is, it doesn't go down once inflation goes up. So if it costs $100 to feed your family, now it costs 250. It's not going back to 100. So you need to get that past your brain and say it is now 250. It may not go down for a while or may not go up for a while, but it's not going down. So, if it raises, that means you got to make more money. You go out and earn more. You have to find ways to save. Um, yeah, and inflation is basically a tax on them, as Barb says, on the middle class and on the poor. So it is one of the worst taxes, and the government knows it, and they do it anyway, and people don't understand it. That's why they do it. So, Phil, what are some of your thoughts? I mean, we've been through this. I mean, we got inflation, we got higher cost of goods. How do you think people can handle this new challenge that we're seeing or have seen? It's not new, but it's certainly not getting better.
It's not, and I think the most important thing to think about is that we have set new levels for prices. That's the key, right? Like you said, if your food used to cost $100 and now it's costing 175 or 200, whatever the number is, that's your new level. You can't forget about the 100. It's gone, right? And that's what happens. Like inflation takes us up to a new level and then it stops there. But prices will still go up over the long term, maybe at a slower pace, but it's not like they're going to go back to that original level. Every time we have a big bout of inflation, it raises the level. And you have to think about ways that you can cut back. That's usually what you have to do because our wage growth isn't keeping up with the pace of inflation. So when the government puts out its numbers like CPI and things like that, they might say, well, the price of beef is up, so you're going to buy more chicken. People may not all do that, but that's kind of the way you have to think is what can I do instead? Or if I'm eating chicken, maybe you have to think about the health aspects too, but maybe I switch from white meat to dark meat because that's cheaper or something like that. You have to think about ways to substitute. And when we talk about all this, I mean, I remember some of those things that happened. I was younger in the 70s, but like my grandparents, they retired because you talked about at the beginning, Kirk, not knowing. They retired because my grandfather had bought all these corporate bonds that were paying 20% plus interest rates. And my grandmother was selling real estate. And at the time, she sold $1 million worth of homes. And at that point in time in Roanoke, Virginia, where she lived, that was a lot of homes to sell. And he told her that she could stop working because they were getting all this money from bonds. But what he didn't realize was they were all callable. That means that when interest rates fall, the issuer has the right to call the bond back from you. And it's not like you're going to get the same rate anymore. If you want another bond, it's at a lower rate, and they're doing it because it saves them money. But a lot of people don't realize that there's provisions like that that come with the bond. And so they retired and then they struggled for quite a while because they didn't have the income that they thought they were going to have. And I remember when my grandmother would lament that she could have worked another couple of years and they would have been in much better position. Right? Or, we look at where interest rates are now. And like I remember when I bought my first home and I was so happy because I got a 6 3/8. That was the rate on my 7-year adjustable rate mortgage. And at the time, that was so cheap. And then they went down and now they've gone back up. But we have to remember that these things move. Nothing stays the same, too. But it's all about trying to figure out what kind of changes and adjustments that you can make to cope with the change in your price environment because you still have to take care of your family. You still have to eat. You still have to be able to get to work and all those things. But there's some things that you might have to do differently. Maybe it means you go out less when it's for food and you're cooking more at home. Whatever it may be, you have to find ways to accommodate your budget to fit the current environment.
Yeah, I agree. Well, as we get close to wrapping it up here, I think one thing I want to ask or I want to mention here is, a lot of times we talk about the expense side and we talk about the expenditure side and how you can save money, and most people aren't thinking about how they can earn more. And I think, it people should be thinking more along that lines because one of the challenges I've seen is wages aren't going up to compensate for inflation. So it's one thing if you have inflation and goods go up, as long as wages go up equivalently, then it's fine, right? It costs you 10% more for your goods, but then you get a 10% raise. It balances itself out. So at the end of the day, it's a wash. Not really, but to some extent it is. The problem is wages haven't kept pace. And so when my grocery bill goes from 100 to 250, that's not the 23% inflation that they're talking about in the CPI. And certainly, if you have some sort of a cost of living adjustment or COLA, and you're expecting CPI to keep up to date, it's probably not going to. So, you need to be real careful about your assessments that you're making. If you buy some policy, some annuity or whatever that's got a COLA, you got to make darn sure you're accounting for the fact that the COLA is probably not going to be accurate for your daily expenses. So you just got to be real careful.
I'd love to add one other thing that we haven't mentioned that I think really relates to all this. We have to invest. That's one of the most important things that you can do when it comes to inflation because, and don't just put it into the savings account or the CD or something like that. You have to have some exposure to the stock market. I know I have a niece and she's never invested before. And we had a conversation last week, and now she's starting to invest because I talked to her about the idea that if we don't, because of inflation, the earning power of that money that we're putting away is going to go down over time. So it's really important that we invest some of our money. And that's something that a lot of people forget about or don't think about that aspect of trying to combat inflation. It's not just growth in your wages, but you need growth in your savings too. And savings isn't, I don't just mean growth from, higher interest rates or something like that. I also mean investing. And I understand that you are not guaranteed to come out ahead. But over the long run, if you take that passive approach that we often talk about, and in an index-based approach, if we think about the fact that the market tends to go up over the long term, that's a way that you can also combat inflation. And it's important that we mention that as well.
Yeah, I couldn't agree more, Phil. I think unfortunately that's why poor people find it hard to get out of being poor because middle class and wealthy people have assets and they go up with inflation and the poor don't. And so everyone's getting beat the same way, but rich people, you've got a 401k, you got a house that's going up and that compensates for the inflation. So you stay rich, you stay middle class because it's inflating at the same rate, whereas poor people they're even if they're cash flow rich, they're asset poor. It's a big problem, right? You got these wealthy farmers in the Midwest who don't have good cash flow, but they're super wealthy. It's because they've got huge tracts of land, which reminds me of a funny Monty Python skit. But anyway, we won't get into that. Anyway, we're gonna wrap it up here. So, Barb, final thoughts from you.
When you're talking about investing, Phil, Invest if your employer has a 401k or 403b plan, many times they will match what you invest in there. And if you are not taking advantage at least of that match, it's like you're leaving hundreds of thousands of dollars on the floor to be stepped on. So whatever you do, make it work so you can invest in a workplace retirement fund at least up until the amount that you are matched. And if you don't know anything about investing, there's so many books on there about simple investing strategies, and you can read, read online very, very easily. And then the second thing I want to talk about is multiple streams of income. And you've got the internet with, I can't tell you how many people talking about ways to earn money. And so almost anyone can find more than just their day job and another way to earn a few additional bucks. And consider earning those multiple streams of income and try not to spend it, but try to use that for investing. And that over the long term will build your wealth and compound your wealth in ways you cannot imagine today. So I'm Barbara Friedberg. You can find me at Barbara Friedberg Personal Finance and on my YouTube channel. Bye.
Great. Thanks for coming on, Barb. And Phil, final thoughts from you.
Barb, that's such a great point you made about the work 401k plans. I like to tell people that if you got the typical match, which is 3% on 6%, that's like a 50% return. Guaranteed. Yes, the investment itself could lose some money, but you're getting 50% back just because you put that 6% in. You can't give that, you should not give that up. And the company thought that you were going to take it when they decided how much to pay you. So you're really, as Barb said, you're leaving money on the floor by not taking it. So it's really important that you do that. And when it comes to all these things, 401k is a great example. Think about paying yourself first. Have the money come out of your paycheck so it never hits your checking account, because what you don't have or don't see in your account, it's a lot harder to spend it. As for me, I'm Phil Weiss for Prize Wealth Management. Experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's a Prize Wealth Management. We'd love to get to know you. If you're facing a new beginning, you can take our Flourish Through Life's Big Changes assessment at prizewealth.com/assessment to discover how ready you are to embrace and thrive through your significant life transition. You can also sign up for our blog. Thanks for having me today, Kirk.
Yeah, thanks for coming on, Phil. Thank you both. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.